account, we dealt with the estate duty account, and we dealt with the distribution account. So there's two other accounts I want to look at with all of you. The fourth account I want to have a look at is the recapitulation account. So if you have a look at your notes from yesterday, we are still busy with them. I believe your recapitulation account will be your second to last page. So if we can all make sure we have the recapitulation count in front of us. All right. So if we look at the recapitulation account, so before we even look at it, let's just talk about it for a second. Now, as you recall, from your liquidation, your estate duty, and your distribution account, those three accounts already painted the picture over who's getting what. Your liquidation account told us what your liabilities are getting and what your estate duty is getting. Then your distribution account went and told us what your spouse is getting in terms of a possible marriage regime, what the legatees are getting if there were any, and what the heirs are getting, obviously the residue, the remainder of the estate. So those three accounts are probably the three accounts that all your liabilities and all your beneficiaries to the will would be interested in.
Sorry, Kyle. You sound a bit muffled.
I'm not too sure why. Maybe perhaps can someone else confirm if they can hear me clearly or not, so we can just establish if the errors on my side.
I see there's a confirmation on the chat line now.
Hi, Kyle.
Yeah, I think it's the Wi-Fi.
Joanna, you muffled on my side.
Yeah, I also muffled on my side.
Yeah.
You muffled.
Okay. Okay, I'm just going to log out quickly and then log back in to see if it makes a difference.
Thank you.
Ladies and gentlemen, do I sound more clearer now, or is it still the same problem?
Perfect.
Perfect. Thank you.
Perfect. All right, excellent.
Thanks, Kyle.
Okay, so what we're saying is, yesterday when we did the liquidation and estate duty and distribution account, what we actually did is we painted the picture already over who's getting what. I mean, the liquidation account set out what your liabilities and estate duty is going to receive. Then the distribution account set out what your spouse might receive in a possible marriage regime, what the legatees may receive, if there were any, and as well as what the heirs would receive, the residue. So if you recall from our process of winding up a deceased estate, when we had that Section 35 advertisement, when we left the L&D open for inspection for 21 days, these three accounts we did last night are the three accounts that the people will be focusing on in retrospect, okay, because that tells the picture already. But now we have a fourth account here. We have a recapitulation account. So this account, we are not giving anything specifically away to anyone. All we are doing in this account is determining how much of our assets is cash value. Now, this is very important. The reason being, if we think practically about it, liabilities, estate duty, and any particular cash legatee are three types of institutions or people that we can only pay in cash. I mean, as an heir, you could inherit a car or a house or furniture, but I can't go and pay my FNB bond account with a car, you know, or a house or furniture or things like that. There's certain people we can only pay in cash. Now, our assets may be more than our liabilities. So on the face of it, we think, well, we don't have a problem on paying anyone. You know, our assets are big enough. But the question still remains, how much of those assets are cash? You might have 3 million rands worth of assets, but only 500,000 rand of it is cash. The other 2.5 million is assets that were rewarded, you know, things that weren't turned into cash. Then the question would be, if I only have 500,000 rand cash out of my whole asset value, is that enough to pay my liabilities? Is it enough to pay cash legatees? Is it enough to pay my estate duty? So this recapitulation account, we firstly determine how much cash is in the account, and then we determine, is it enough cash to pay those three people that we need to pay in cash. All right. So this account is purely for purposes to see if we can practically do our L&D account. If, in other words, can we properly distribute our account in terms of the liquidation and distribution account? In terms of, do we have enough cash to pay those who need to be paid in cash? So if you have a look at the recap account, on the top there, you'll see it starts off with cash assets and assets reduced to cash. Now let's analyze that sentence. Cash assets refers to assets that are cash. Now, if you recall from the liquidation account, what did we do with all the assets that were cash? We said collected. Assets reduced to cash, is that not assets that were sold for cash? What did we do in the liquidation account with assets that were sold for cash? We realized it. So looking at the term cash assets and assets reduced to cash, another way of saying it would be collected and realized assets, right? The wording gives it away. Now you will see underneath it, I write the items, and then I put a bunch of question marks, okay? Now you can make your note over here. This is why we numbered our assets in our liquidation account. What you go and do now is you go back to your liquidation account and you look at your assets there, and you look what assets were realized and what assets were collected. Okay, so let's say for argument's sake, I'm going to quickly flip to the liquidation account, the one that the example we had. Okay, if I have a look at the liquidation account, just make sure we are all muted, ladies and gents. There is some noise coming through on my side. I'm not too sure if it's me or someone else. If we had a look at the liquidation account, our first item was the immovable property. We awarded it. If you then look at your second item, it's the vehicle. We awarded it. The third item was household furniture and effects. We awarded it. The fourth item was a firearm. We awarded it. Fifth item was Kruger Rands realized. Okay, so now in my recapitulation account, I'll write the item 5 and I'll put down the value of item 5. The sixth item was ABC Company, private company. I see that we realized it. So I'm going to go to my recapitulation account and write the item 6 and put that value down. Seventh item was the DEF company. I see we awarded it, so we skip that. And then have a look. Item 8, 9, and 10, we collected each of those items. So I'm going to write the item 8, 9, and 10 underneath each other. So there's about 5 different items from our liquidation account that we realized or collected. All we do now is we copy paste that value down. You'll see I did it in the first column because the first column is the calculation column. Second one is the minus column. Third one is the plus column. So I just put down all their values in my calculation column and I added it up. You'll see I drew a line with an arrow to where you put the total figure. So you put the total figure there next to cash assets and assets reduced to cash. In other words, by doing this, by adding up all the assets that we realized and collected, we now understand and have the figure of what the total value of cash is in our deceased estate. Now the next step is, or the next objective, is to determine this amount of cash that we have. Is it enough to pay our liabilities, our estate duty, and any possible cash legatees? So you'll see directly there under, I write there 2 liabilities. So I'll put down, well, I'm sorry, I see liabilities, estate duties, and cash legatees. I made an X in the calculation column. That's an error. That X should be in the negative column. All right, so just make a note of that. Liabilities. Where do I get my liabilities from? From my liquidation account. So I go and record what my liability figure was. I go and have a look, how much was my estate duty? I put it down. I go and have a look, was there any legatees I had where the will specifically said they need to be paid in cash? All right. Perhaps the will said give 100,000 Rand to this person. That's a cash legatee. All right. I minus my liabilities, my estate duty, and my cash legatees from my cash assets and assets reduced to cash. So that figure right on the top right, we then take that figure and minus liabilities, estate duty, and cash legatees. That is going to give us an answer. All right. If the answer is positive, we call it a cash surplus. If the answer is negative, we call it a cash shortfall. Now let's think practically about it. If I get a positive answer, I have a cash surplus. That means I've got enough cash to pay liabilities, estate duties, and cash legatees. If I get a negative answer, it is a cash shortfall. That means I do not have enough cash to pay my liabilities, estate duties, and cash legatees. Now, ladies and gentlemen, in reality, that is a problem. So if I came across that problem when drafting an L&D, in reality now, if I get a cash shortfall, the first thing it tells me is I'm going to have a problem paying these people. And they can't be paid with furniture. They need to be paid with cash. So what would I practically go and do? I would go and have a look at the assets I awarded. And I might need to sell some assets. I might need to sell some assets so that I then have enough cash to pay these three things, all right? Because the point is they need to be paid in cash, all right? So that's how you would attend to it in reality. Now, the question might be, okay, but if we're doing this in practice, how do I decide what assets do I need to sell and turn into cash so that I have enough cash? Well, it's quite simple. You know, if the testator wanted to leave specific assets to specific people, I will try not to sell those assets because it was the testator's wish. I mean, that they get those assets. So I'll try and avoid that. I mean, then you also got to think practically. Maybe we have a cash shortfall of 50,000 Rand. And the only asset we can sell is the house. But the house is worth R1 million. Does it really make sense to sell R1 million house for 50,000 Rand? It doesn't, hey? But the reality is I need to get that 50,000 Rand. So if I have to sell the house, I have to sell it. But perhaps I might go to the beneficiaries of the house, those heirs, and I might say, listen, you've got two choices. First choice is I sell the house, pay the 50,000 Rand with it, and the rest of the cash that's left over I divide between the heirs. Or the heirs to the house, you can keep the house, but then you must give me 50,000 Rand to pay that debt off, you know. So you sort of give them an option. That is how you would practically go about doing it. But for purposes of exam, I mean, you don't need to go and show how you'd practically go about doing it. You need to understand this recap account. You need to understand we calculate all the assets that were cash and then minus liabilities, estate duty, and cash legatees from it, and see if we have a positive or a negative answer. Positive being cash surplus and negative being cash shortfall. So this account, we're not actually giving anything away. It's just for purposes of practically seeing if we can do what we are trying to do in our liquidation account. That's it. Nice and simple, the recapitulation account. So I think, let me just open up. Do I have any questions regarding this account?
Sipho.
Sipho, go for it.
Am I correct if I regard this recapitulation account as a balance sheet of the estate?
Well, I suppose you could look at it that way, Sipho. You know, it's basically a balance sheet to see how much cash we have and if it's enough. So you could view it that way, I suppose.
Okay, thanks.
Cool.
Fatima,
go for it.
I'd like to know, under the cash assets and assets reduced to cash, the items, do we list them in detail? Or do we just like put in those numbers like 8, 9, and 10? Or do I say EPSA, bank check account, etc.?
So you just put the numbers in. So that's pretty much why we numbered it in the first place. So you just would say item 8, item 9, item 10, whatever was realized or collected. You don't need to mention details about it at all.
Okay, thank you.
Perfect.
Sipho again.
Go for it.
Am I right to say that in the recapitulation account, we only focus on that which was realized or collected?
Correct, Sipho. Just the realized and collected, because realized and collected meant it was cash. Hey, anything that was awarded was not cash. So we're just interested in figuring out how much cash we have. The realized and collected items tell us that.
Okay, thanks.
Sepang,
Sapang, I heard you.
I don't think I heard you correctly. When you said liabilities, is it not the X? You said it's in the wrong column. I mean row.
Yes. If you have a look at the recapitulation account, we said 2 liabilities, 2 estate duty, and 2 cash legatees. You'll see I put it in the first column,
Yes.
right? But that's my calculation column, so that's wrong. Those 3 X's by liabilities, estate duty, and cash legatees must go to the second column. It must go to the minus column, because I'm going to minus those 3 things from my cash assets and assets reduced to cash.
All of them. Oh, okay.
All 3 of those, yes.
All right, thank you. I thought you only said the liabilities. Thank you.
No. All 3, yes. And keep in mind going forward, you know, there is no other things in our recapitulation account that we need to minus besides those 3 potential things.
Thank you.
Perfect.
Gloria.
Hi, Kyle. Thank you for the opportunity. I actually want to ask a question about yesterday's lecture concerning the liquidation and distribution accounts under liabilities. The part where you spoke about admin expenses. Let's say, for example, the admin expenses is given as one amount. Is it necessary to list the bank charges, the valuation costs, the transfer costs, and all those things? Are we going to get marks for it? Can we not just write admin expenses as it is as one? Is it necessary to name all those points?
Well, Gloria, it would depend on your exam question. The exam question might just tell you admin expenses X amount. Then you would just say admin expenses and put it in. Or it might ask you to just make up admin expenses as well. It might say your admin expenses is 400,000 Rand, but show me the different types of admin expenses as well. So it would depend on how they try and structure the exam question.
Oh, I see. So then it's necessary to know all these admin expenses.
Yeah. Know the different types of admin expenses.
Okay, all right. Thank you.
Perfect.
Nadia,
you can go next. I just want to say someone is unmuted and it is causing a bit of disturbance in the background. Right, Nadia, go for it.
okay, so quick question. A quick question. It's probably a very silly question, but just for clarity. Say, for instance, an asset is valued but not sold. Do we award it or do we realize it? I'm assuming we just award it because it hasn't been sold.
Correct.
Okay, perfect. Thank you so much.
Good stuff.
Karabo?
Karabu, go for it.
I just want clarification. So from the cash assets, right? From that value, we subtract the liabilities, the estate duty, and the cash legatees, right?
Yes.
And from there, if it's a cash surplus, fine. But if it's a negative, then in order to, for instance, let's say it's negative 30,000 Rand, then the assets that are being sold is the assets that go to the heirs, or is it just the general assets overall?
So yeah, so let's say it was a negative 30,000 Rand. That would mean that I would need to go sell some of the assets that were rewarded in my liquidation account to get 30,000 Rand. So I might speak to my beneficiaries and heirs that are inheriting from there and get an idea from them. What assets do they think is the best that we can sell? They might want to keep the house or the car. So they might say, well, let's sell the furniture, let's sell the firearm, and sort of get direction from them what I should sell, because we'll have to try and make up that 30,000 Rand somewhere.
So it's the general assets. It's not specific assets from that go to, for instance, the beneficiaries and the heirs. They're not separated. They're all together.
Yeah. So it's general assets as such, But you might end up getting. You might not have general assets lying around. You might only have an asset that was awarded to someone specifically, and the problem then is that we might need to sell that asset. Because at the end of the day, liabilities, estate duties, and cash legatees are ranked above our heirs. So, you know, ultimately, selling assets so that we can pay these three people has preference over whatever claim someone feels they have towards a specific asset.
So now, sorry, just the last bit.
No, go for it.
So now, from this negative to trying to sell the assets, do we need to show a calculation, or is there anything that we need to do to after the calculations being done?
For the exam purposes?
Yes.
Well, not for the exam purposes, no. But in reality, I would have went and sold, you know, one of my assets, and then I would have had to change something in my liquidation from awarded to realized, you know, ultimately.
All right.
But that won't be necessary for exam purposes.
Okay.
Kyle, it's Kokonono, yeah.
Go for it.
Yeah, I was looking at the exercise that you gave us on lecture 3, and I just want to ask a question because I was working on it. There is, I think it's a life policy for liberty with no beneficiary. So my question is, if you award that, do you award that interstate because of there is no beneficiary?
No. Well, no. Remember, a life policy doesn't get awarded; it gets collected.
Yeah, it gets. Oh, okay. No. That's fine. No, that's fine. No, I think you have answered me. Yeah. No, that's fine. Thanks.
Hi, Percy here.
Yeah. Percy.
Yes, just a question of clarity. Let me say, it's 3 beneficiaries, and 2 were awarded maybe a property to the value of 100,000 and whatever asset to the value of 100,000, and I was awarded shares, but the shares were realized to the value of 100,000, and you go to this account that we are currently busy with. So my realized money will be used to settle some of their liabilities. So in terms of the balance, how is it going to be handled to ensure that I also get what is actually that I need to benefit? Because 2 assets were not were awarded, but mine was realized. So how do we work around that?
But Percy, if yours was realized, wouldn't you agree that you then become a cash legatee? Because yours was converted to cash, so you're entitled to that cash. So you see, the recapitulation account would make provision for you because it has cash legatees in it. So you would fall there under, meaning we've got to have enough cash to pay you your cash.
Yes, what I'm saying is that the cash was used to pay for the liabilities.
Okay, and because there's nothing else left.
Yeah.
Okay. Well, the thing is, Percy, if there's nothing else left, then you can't inherit. But if there is other assets left, we'll have to turn that into cash so that you can get paid. Because remember, you're going to rank above the heirs as a legatee. So we'll have to just look, is there other assets we could sell so that we can make sure you get to 100K? If the answer is yes, then we're going to do that because you must get paid. If the answer is no, then you're going to miss out because there's obviously nothing left in the estate.
So it simply means we will have to look into those assets that were awarded to the other 2 beneficiaries.
Well, exactly, because we'll have to split it between the 3 of you pro rata, you know? So we'll have to make some form of plan on that because you will rank on the same level as the other legatees.
Okay.
Excellent.
Katlego?
Katlego?
Yes, I just wanted to ask who receives first preference when it comes to payments and so forth, or a distribution of the wealth of the
Okay,
sorry.
Yeah, so the liabilities and estate duty is first, eh? So your creditors, those people you owe money to, are always ranked first. Then the distribution account sets out the preference. Marriage comes next, then legatees, then heirs.
Okay, just one more. And then where does where do insurances go under the accounts?
How do you mean insurances?
Sometimes there are some insurances whereby they pay off maybe your debts and so forth. So where do we put those if you die earlier than your debt is finished?
Okay, so if they're going to pay it off, because obviously we still have to show our debt. So, but if they're going to pay it off, we'll have to put the insurance claim under claims in favor in our asset account, because that's going to be sort of cut off by your liabilities as such. The one is going to cancel the other. So it'll come under our assets under claims in favor.
Claims in favor. Okay, thank you so much.
Cool.
Nomsa,
Nomsa, I'm listening.
thank you. I'm struggling regarding awarded, collected, and realized. Can you briefly summarize the concept, please?
So remember, if an asset is not cash, so it's a thing we can see like a house, a car, a furniture, a gun, whatever the case may be. In other words, it's not cash, but it's an asset. Then we have to award it. If the asset, let's say the question says there is a car there, all right, the deceased left behind a car. That car is not money, all right, it's just an asset, so we award it. But if the question said he left behind a car, but the executor went and sold that car for cash, then it would become realized. So any assets that are sold for cash is realized. And then the third option is sometimes there's already cash there. I mean, if you pass away and you leave money in your bank account, that cash is already there. If you pass away and a policy pays out into your estate, that's cash that comes in. I didn't have to sell anything for that cash. Then we call it collected. Did I cover you, Nomsa?
Yes, yes. Thank you. Makes sense.
All right,
Thank
stuff.
you.
All right.
Desiree.
Okay, Desiree.
Fatima?
Hi, Kyle. I just wanted clarity on something. I'm not sure if you'll be able to answer this, because I remember you once mentioned that you're not really part of the drafting of exam papers and all of that. But I just wanted clarity from, I'm not really experienced with the accounting side of things, but I see this with this liquidation and distribution account. It's got what's this? Is it something for I'm talking about for exam purposes? Is it something that we would have to draft on our own and submit online, or will the paper be online and the setup will be there, as in the columns will be there and we just have to fill them in, or what? Or do we have to draft our own paper, draft our own exam paper and then submit it? That is, draw our own columns and all of that. Yeah. I'm asking for purposes of time-wise to prepare.
So the thing is, Desiree, I can only say what I've seen. From what I see is you're required to draft your own columns. I don't know if it's online, if they already put columns for you. I don't know how that's going to work, but usually the students need to draft the columns as well.
Okay. Okay, thank you.
Right.
Nadia.
All right.
Fatima.
Okay, I heard a Nadia and a Fatima, so let's go in that order.
Again, a very silly question, but would it be safe to assume that beneficiaries to a policy is a legatee?
No.
Okay.
No, because that policy that paid out to the beneficiary never formed part of your deceased estate.
Oh, yes, 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 I remember. Thank you so much. Thanks for the clarity.
Excellent. Okay.
Nomsa.
Can I ask a question?
Yes, go for it.
Okay.
After you, it will be Nomsa.
Thank you.
Just taking you back to yesterday about the life policies. Okay, so the deceased has a life policy, and that's the only major asset that he has. Okay, he doesn't own a house, nor does he own a car. I'd like to know if the family then goes forward to the institute that has the life policy on the deceased and presents them with the death certificate. Does the institute charge an estate duty, or do they just pay out the sum due to the beneficiary?
So the thing is then, if that sum was paid out to the beneficiary, we understand that it forms part of the estate duty account. So the question then would be, we'd have to include it in the estate duty account. And if it's a large sum of money, it might mean that whoever obtains that benefit, look, that never formed part of the deceased estate. So it might mean that the deceased estate would have an estate duty amount payable, meaning that the deceased estate passed away intestate. but you wouldn't be able to go and claim outside of the deceased estate. You can't claim from that other person because that money never formed part of the deceased estate. If I understood your question correctly, it did break up at a certain stage.
Okay, so there is no will. They just go to the institute and they said, okay, so and so has died. Here's the death certificate. And does the institute just pay out, or does the institute do they then charge an SA duty, like with the bank? Just say the policy is with a bank, Standard Bank or wherever. Does Standard Bank charge a SA duty on that life policy?
No, they just pay out, eh?
Okay, and then my next question is regarding foreign property. How do we deal with that with regard to SA duty?
So foreign property, look, if you had foreign property, you would have to include it as an asset in your liquidation account because it's still your property. Okay. However, we cannot tax you in South Africa on foreign property because that will be subject to its own tax laws. So we'll have to minus it as an allowable deduction in estate duty.
Okay, thank you.
Perfect.
Kokonono, yeah.
Okay, so
yeah, I think it was Nomsa, and then we'll go to Kokonono. That'll be the last two questions for now. So let's go Nomsa, then Kokonono.
Thanks, Kyle. This question, I don't know if Zukiswa is in the forum or not, but it's directed to Zukiswa. I'm asking about the issue of posting the recordings. Some of us have missed out on, for instance, the beginning of the session and so on, and it will do me very well if I listen to the entire thing once again. The second thing is around the question that was posed a few minutes ago around the question paper and how we're going to access it online and so on. Can we ask Lead to help us with explaining, even if Zukiswa cannot explain that question around the question paper and how it's going to work online and so on, at least we can be written something on the e-leader. That's what I'm asking, because we need to prepare and we need to know whether we should prepare things in advance, we're going to find things on the platform, or what's going to happen. This is our first exam, so we'd like to understand that process. Thank you.
Okay, Nomsa, so while you were speaking, I popped Zukiswa a quick message, just in case she's not on with us, about posting the recordings. So that'll happen. I know she did tell me she's going to do that. So yeah, that will come up. And regarding the question paper, I mean, you can speak to her as such. Just hold on 1 second. Okay, what Zukiswa was also saying is that you should email her if you have any concerns. There she says so as well. But the recordings will be posted, but email her if you have any other concerns. But regarding the question paper, you know, study to draft the column. I mean, the reality is that this is not just for writing an exam, but this is being a lawyer going forward. So you'd need to be able to draft the columns. But if you look at it, it's nothing. It's just a description column, and then you can do three extra columns for each one: a calculation column, a negative column, and a positive column. You don't have to vary the columns. You know, you can just stick to it. So what I'm trying to say is, when you prep for the exam, prep to draft the columns as well. I think that's the safest thing. But you're obviously welcome to email Zukiswa as well.
Okay. Yeah, Kyle, I have two questions. One is based on the interest and then interest owed. Now, obviously, if ever your date of death was at a certain time and you had 20,000 and 10 days later you have 20,500. So I want to know that with regard to interest end, where do you actually post it in your L&D account in totality? Whether does it go to your income and expenditure account? That's the first question.
Correct.
Yes.
Correct.
And then
if it came off the date of death, off the date of death, then it's income and expenditure.
Or income and expenditure. All right, thank you.
Yes.
The second question is, I think, estate duty on your liabilities. Obviously, by the time you do your liabilities, you don't know exactly your estate duty. So what it means is that you first do your estate duty account and get the number and go repost it back on your liabilities. Am I right?
Yeah, so you would do your liquidation account, you do your assets, and you do your liabilities. liabilities, and then you come to estate duty. Then we leave that open. Then go do the
Yes.
estate duty account and then go back.
Oh.
Yes.
Okay, thank you.
Perfect. All right, ladies and gents, let's go on to the next account now. It's the final account we're going to go through together. It is the income and expenditure account. Now, ladies and gents, this is the only account that has absolutely nothing to do with the other accounts. If you're putting figures in this account that are shown in another account, then you know already you are wrong. Okay? So the whole point of the liquidation account was to record assets and liabilities of the deceased person at date of death. But now we need to think practically. There can be money made or money lost of the deceased estate after the person passes away. I mean, for example, if you pass away today and you have 500,000 Rand in a savings account, and that account is drawing interest. Let's say 2 months later, a person gets a letter of executorship and comes and closes down that account that had 500,000 Rand in it. Maybe 2 months later, you don't have 500,000 Rand in that account anymore. Interest accrued thereon, and you now have 504,000 Rand. Now, in our liquidation account, by claims in favor for that bank account, we would have put the date of death value. So we would have put 500,000 Rand down on our liquidation account, because the 4,000 Rand interest that accrued after date of death. So I can't put that in my liquidation account. But that 4,000 Rand made is income made after date of death. So that is going to have a home in our income and expenditure account. On the same wavelength, you could have had 20,000 Rand in your ABSA check account the day you die. 2 months later, the executor closes the account down, and now you have 19,900 Rand in it. Now the question would be, how does 20K turn into 19,900 over 2 months? Well, perhaps there was bank charges that went off on that account before the executor closed it down. So it means you lost 100 Rand. You had 100 Rand loss off the date of death. So that 100 Rand loss would come as an expenditure under our income and expenditure account. So I want us to focus on bank accounts, especially when it comes to the income and expenditure account. Okay, because the question will tell you, perhaps, on date of death, you have so much in your bank account. But when they close the bank account down, you have a different figure. Now, the amount they tell you that you had a date of death is the amount you put in your liquidation account. But the difference between that amount and the amount that is portrayed after date of death is either higher or lower. If it's higher, it means you made income after date of death. If you've lost money, you've obviously made expenditure after date of death. And that is what we need to record in our income and expenditure account. Another tip to remember, when you have income after date of death, you automatically have at least one expenditure after date of death. So the rule is, as an executor, you are obviously sort of given incentive if you can close down the deceased estate in the most profitable manner possible, because that means the beneficiaries are going to inherit more. Okay, so they're saying if you can bring income into that deceased estate after that executor dies, we will further reward you. We'll give you 6% as executor of any income you bring in after date of death. So that's an additional 6% of any income you bring in after date of death, in addition to your 3.5% fees you got on your total assets in your liquidation account. Okay, so if we have a look at this income and expenditure account on the last page here, we'll see we have the heading income, and I just put there FNB savings account interest, and obviously you'll put that amount in the positive column because anything we're plussing is positive. Now that's a typical example of that bank account that grew after the deceased passed away. Now the only way the account can grow is if it builds interest. Right, so typically interest would be what we'd be looking out for. Any growth in that bank account after date of death has a home under income in our income and expenditure account. Underneath that, you'll see I put the expenditure. The very first expenditure is our executor's fees that we spoke about. 6% of the total income, you are entitled to that. So there's at least one expense if you have income. And then I wrote the ABSA bank credit card bank charges. So this is now obviously when your bank account lost money after the day you passed away. Now, if you're going to lose money, I can only think that, you know, there wasn't money coming into that account because obviously you've passed away, but still on a monthly basis, the bank was debiting their bank charges as such. Okay, so that would be a loss to your estate after date of death. Now, what you do then is you'll see underneath expenditure right there, balance available for distribution. What you do now is you go income minus expenditure will give us a figure. All right. Let's say our income was 10,000 Rand after date of death, and our total expenditure was 2,000 Rand after date of death. That would mean that I'll have 8,000 Rand available. Now, the question you must ask, this 8,000 Rand extra cash that's available, have I given it away yet? And the answer is no. We haven't spoken about these figures in the other 4 accounts. Now, as executor, you can't hold on to that 8,000 Rand. You need to distribute that 8,000 Rand. How do we distribute it? In the exact same way we distribute it in our distribution account. So you don't open a new account. Underneath that balance, you just start distributing it. So first things first, let's go back to our distribution account and see what we did there. We distributed in terms of, okay, I got it now, in terms of marriage, legatees, and heirs. Okay, so again, if there was a marriage and community of property, I would have given half of that 8,000 Rand to my spouse. So the spouse would have taken 4,000 Rand. You can see after spouse, I went straight to heirs. Because ladies and gentlemen, if your will says you must give 100,000 Rand to a legatee, and then in your distribution account, you gave 100,000 Rand to your legatee, I can't give more money to the legatee now, right? So usually in your income and expenditure account, when we distribute whatever's left, we just focus on marriage and heirs because the legatees were sorted already in the distribution account. So I give away in terms of my marriage, if there was one, and it was in community of property, of course, and then I give the remainder to my heirs. And then at the bottom, again, I have a nil balance available for distribution. So it's almost pretty much a 2-in-1 account. Figure out what money was made or lost off the date of death, get an answer, and then give that away the same way we gave it away in our distribution account. Minus the legatees, of course, because we've already sorted the legatees in the previous account. Right. That's pretty much all there is to entail for an income and expenditure account. So again, let's open the floor up for questions on this account.
Siboniso.
Go for it.
Okay. My only question here is, does it happen that maybe the income is lesser than the expenditure, and then if that happens, what happened then?
Okay, so that would be a bit of a train smash, because now we would have a negative balance available for distribution then, meaning I can't go and give that away. So my sum would end right there and there. So now the question would be asked is, why is there a loss after date of death? Executor, is it your fault? Did you act negligently in closing this account down? Because if it's your fault, then you as executor must cover that loss. But obviously there's a possibility it's not your fault. It's just the way things happen. We lost money after date of death. Then we would have a practical issue, because keep in mind, if we lost money, that means there's money we owe. And any money we owe is ranked above marriage, legatees, or heirs. So we would have to then go and take that loss and add it as a liability in our liquidation account as such, meaning our whole L&D is going to change now, because now we have extra payments we have to make, meaning there's going to be less for the marriage, less for the legatees, and less for the heirs ultimately.
Okay, thanks.
Good stuff.
Jonathan?
Jonathan, go for it.
I just want to know, in the very first or second lecture, you spoke about the pension fund, and it is not subject to wills and estates. I just want to know if we get a question in the exam about where they give us a figure or they speak of the pension fund, do we ignore it or how do we deal with it?
Yes, you exclude it. You exclude it as such. Don't place it in, because if you place it in, you're going to get your final calculations wrong. So you just ignore it. It's sort of like a trick question.
Okay, thank you.
It's Kokonono. Oh, sorry.
Okay, Kokonono, I heard you. Go for it.
Yeah. Just a quick one. So on the income and expenditure account, the 6%, okay, I think it's obvious. So it's 6% of the total income after death, eh? So it doesn't have
Correct.
to do with any account, any of those previous accounts.
Correct.
Okay, thank you.
Good stuff.
Hi, Kyle, Roddy.
Okay, go for it. Ladies and gentlemen,
talking about the 6% for the executive fee.
Sorry, sir. Sorry, sir. One moment. Before I take your question, there's a couple people that's not muted, and it's causing a bit of a delay in what I'm hearing from this side. Thanks. Okay, sorry. Go for it, Roddy.
Hi, sorry about that. Carl, regarding the executive remuneration, like the 6% and 3.5. Now, does the executor have to pay tax on it? Does the tax get taxed out of the amount, or just for leave it as that for the exam purposes?
No, you don't have to worry about that. I mean, what the executive has to pay is for the executor, you know. So if you as executor, if your executor was your law firm and you were VAT registered, you would have to pay VAT in your personal capacity as such.
Okay. And there's one question which I want to actually bring to you. Mentioned that lady actually wanted to give definition of the awarded, realized, and collected previous caller. There was actually a question that came across where the executor realizes the investment and then it was recorded as collected. Would that make sense?
Yes, it would make sense. It would make sense. So the thing is, look, an investment, all right, is sort of like a policy in the sense that it's not shares as such. So I would record investment in the same way I would record a policy. I would collect it.
Okay, thank you very much, Carl.
Yeah. All right.
Nadia.
Zama.
I heard a Nadia, then I heard a Zama. So Nadia, go for it.
Great.
And I heard a Sherry. You third.
Okay, so I've got one quick question. Say, for instance, the balance left for distribution after the income and expenditure account is 8,000, and the deceased was married in community or property. Then I'm assuming that his spouse will obviously get 4,000, and then 4,000 will remain for distribution among his heirs. My question lies with, after the wife had been paid 4,000, which is half of it, is she then included as well with the heirs? Do we distribute, like for instance, if we had 2 sons, do we include her and like distribute the remaining between 3 people, or do we just distribute it among his heirs?
Well, what does the will say? Depends. Did the will appoint the spouse as an heir? If the will did, then yes. And if it's intestate law, then yes as well.
Okay, great. So if it's interstate, then the wife will be then regarded as an heir as well. So she'll get half a portion, which is like 4,000 rand, and then she'll be included as an heir, so she'll further get some odd rands.
That's it. Her proportion there too.
Okay, perfect. Thank you, Kyle.
Good stuff. Okay,
I'm
next.
sorted, Kyle. She asked the same question that I wanted to ask.
All right, then I think there was a Cherie, something like that.
Yes, Kyle.
Yes.
Just want to ask, with shares that are sold at a amount that is valued lower, so you technically make a little bit of a profit on it, would that also go to the income and expenditure accounts, or how would you include it in your account?
So if the shares were sold for more than what they were valued at?
Yes.
So remember, anything sold for more than you valued at, you say realized and you use the sold for price. So when you see things being sold, it doesn't come in our income and expenditure account.
Okay, thank you.
All right.
Adele?
Gloria. Gloria.
Okay, I heard Adele, then I heard Gloria. Go for it.
And
Solly. All right, go.
Carl, what happens when the person passes away? Do all his bank accounts are they not automatically closed? So surely there shouldn't actually be any bank charges.
would with the estate late account not then would not all the money from the bank account be put into that account, and is that not one way of making sure there aren't any bank charges?
Well, I would like to think that's what we do, but unfortunately, when you pass away, the bank doesn't know that you pass away. So if no one goes and closes it, then we're going to incur bank charges. So in reality, as executor, you would try and close that account before any further charges accrue. But sometimes you just don't do it in time. I mean, if the charges go off on the 1st and you die on the 30th, perhaps as executor, you didn't get a gap to close whatever further charges go off, or the case may be. Some people, they need to get the letter of executorship, or they only go late to the bank to go and close it. And then some time has passed already, and then we have these bank charges that accrue. So in the perfect world, that shouldn't happen, but unfortunately, it happens quite a bit.
Okay, thanks.
Good stuff.
Kyle, hi.
Okay, before we go on,
it's Gloria.
Gloria was next in line. And remember to
I'll
say your
come
name,
next
ladies
then.
and gents.
Okay, William, I'll come second after her.
So Gloria, then Solly, then William. Okay, Gloria, go for it.
Hi, Kyle. I want to ask about interest and the income. I'm not sure if you spoke about this yesterday. I was having some technical issues in connecting. Where does the interest come from, and also on the expenditure, the 6%, is it fixed?
The 6% on the executors' fees
of the total income.
Yes, that's fixed. It's fixed, yeah.
Okay, and the interest, where does that come from? Where do we get that?
Well, that's from your exam question. If your exam question puts that forward, so that would depend purely on that, yeah.
Okay, so if it's not given, then we just leave it out.
Correct.
Okay, and I wanted to ask, since I was having some technical issues in connecting yesterday, and I think this is the last one that we are doing. If there's still time, is it possible for us to go through yesterday's lecture again, if you don't mind?
Well, unfortunately, ma'am, I cannot do that. But what I can tell you is that the recordings will be put forward. So you'll be able to listen to all the lectures. So don't worry about that. What I am going to do now is I'm just going to sort of go through that example that I sent to all of you as well, that they put on eLeader, and you'll be able to pick up on things there as well. But yeah, if you miss something, there will be recordings made available for you.
Okay, so should I have questions after listening to the recordings? How do I get in touch with you?
Well, the best thing to do would be to mail the law school, and they can forward things to me.
Is that now Zukiswa?
Yes.
Or someone in particular?
Now, Zukiswa is the person that I'm in contact with, so I would suggest her.
Okay, all right, thank you.
All right. I think there was I heard a Solly or something.
Yes, Kyle.
Yes, Solly, and then I heard a William or something like that.
And Sam. Okay, thanks, Kyle.
Yes.
Yeah, you would correct me if I'm wrong. Earlier on, when we were dealing with the recap account, you indicated that when you are looking at the cash assets and assets reduced to cash, you look at the cash in the form of money in the bank account, life policies, and shares from the private company, except for public company shares. Is there a specific reason why you did not mention the public shares, or is there something which precludes from collecting cash from the public companies?
So Solly, there's no specific asset that is collected or realized. Well, the reason why I missed, why I did it that way, is I just went back to our liquidation account and I saw what was awarded, what was realized, what was collected in our fabricated example. So I just mentioned things that are realized or collected. But in the exam, you must interpret your question. you know, you're not going to get, you can't copy and paste this L&D account because we're just talking about how to draft it. I mean, I made up things that were realized or collected or awarded just so I can illustrate to you how you go about doing it. But there was no specific reason why I skipped public company and did private company, because you would have to interpret from the question in your exam whether it is realized or collected. There's no rule to say a private company is realized and a public company is awarded. No. It's purely based on what your exam question is telling you.
Okay, super. Now I follow. Thanks.
Perfect. Right. I think it was a Willem that I heard earlier.
William here.
Yes, go for it.
Sorry, like I had a technical glitch, so I wanted the repetition of the recapitulation account only after you take all the questions with regard to the last account we did.
Yeah. So Willem, unfortunately, I can't repeat things, you know.
Okay.
I can't go back, but what I can tell you, Willem, is the same I told the other lady, Nana. If you miss something, please have a look at the recordings. It will all be there. This has been recorded as well, so you will be able to go back and have a look.
Okay, thank you.
Desiree.
Okay,
Sipo.
Okay, last three questions. Desiree, Sipo, and then I heard a lady in between the two of them. That will be the last three questions before we move on. Okay.
It's Desiree.
Yes, Desiree, you were first.
Hi, Carl. So I just wanted clarity on something. With regards to what's this say, a life policy. This person has a life policy, and it has a surrender value of a certain amount. I remember I wrote down on the notes, you said that if no beneficiary for life policy, then it can be included in the deceased estate. Only if this happens can we then add a policy to the liquidation amount. So if this person has a life policy over someone else's life, but it has a surrender value of a certain amount, we only include the surrender value and not the policy amount, because it's not paying out to them.
Correct, yeah, because it couldn't mature because the other person didn't pass away.
So we don't include it anyway in this liquidation and distribution account. We only include the surrender value.
In the liquidation account, yes.
In the liquidation account.
That's it.
Okay, thank you so much.
All right. So there was another lady, and then there was Sipo. We said that's the last two questions for now.
Yes, I think it was me.
Go for it. Yes, it was you. That's right.
Yes, there was a gentleman that asked, or that informed you earlier that we had a technical glitch. We were sent a link that somehow didn't take us to this session. So about 80 of us were there whilst this was continuing. So we came in and you were already finishing I think it's the recapitulation, I hope I'm pronouncing it correctly, section of, yeah, that's where you are currently at. So majority of us did miss it. So maybe if you find time, just browse through it again so that we understand it when we go through the notes on our own, please.
Well, this is, like I say, it can't be the majority because we're about 260 people on here. But I can't go back and repeat things from earlier, unfortunately. But you don't have to worry about it because the recordings will be made available. So you will be able to go and listen to what we spoke about in the first half an hour of the lecture that you missed, perhaps. So it will be available for you to have a look at, and you'll be able to, hear everything I had to say and any questions that were on there as well. But just as a basis, perhaps I can just say, so that you're not completely lost, the recapitulation account we use to determine how much cash we have in our deceased estate. Now, remember, we had a whole bunch of assets in our liquidation account, and the only assets that were cash was all the assets that was realized or collected. So what we went and did is we went and named all the assets, not according to their names, but according to what number they were. That was the purpose of why we numbered things in a liquidation account. So we named all those numbers of the assets that was realized or collected. We added it up, and that gave us a cash asset and asset reduced to cash value. Now we know how much cash is in the deceased estate. From there, we minus liabilities, estate duty, as well as cash legatees, because those are three people, three things, let's call it that always needs to be paid in cash. So when we minus those three values from our total cash amount, we either got a positive or a negative answer. If we got a positive answer, we get a cash surplus. And the point of that is if we get a positive answer, it means we had enough cash to pay the things that needed to be paid in cash. But if we got a negative answer, we got a cash shortfall, meaning we did not have enough cash to pay liabilities, estate duty, and any cash legatees, meaning we have a practical problem with our L&D account. So in reality, we'd have to go and sell some assets for cash to ensure we have enough cash to pay those three things. I hope that sort of helps a little bit.
It does. Thank you.
Perfect. There was one more question. Sipu, I believe.
Yes, Kyle, please help me with the difference between liquidity and solvency of the estate.
Between, sorry, liquidity and
solvency. Solvency.
Yeah, so liquidity just refers to the cash flow you have going. Solvency refers to you have more assets than liabilities. I mean, if your liabilities exceed your assets, then you become insolvent. And then there's going to be nothing left for your marriage, legatees, or heirs. So you won't have anything in your distribution account if you're insolvent. But if you're solvent, we'll have a distribution account in essence.
Okay, thank you.
All right. Okay, ladies and gents, what we can do now, and I'll open the floor up when we're done with this again for questions. But my thought process is we should have a look at that example I sent. So yesterday you would have got these notes, and then you would have also got a separate paper that I've just put up sort of like a fabricated example and something, you know, similar, obviously not the same, but sort of things we can look out for of the way questions would be asked come exam time. So what I thought is I should go through this question with you, and then what we can do is I can tell you, you know, where these assets should go, where they would find their home, and we can make our notes as we go along doing it. That would be helpful. And then when I'm done going through it and telling you, you know, where we would find these assets and in what accounts we would place them, I'll open the floor up for questions again. Okay. But I think what we should do is, because I'm sure some of you need to go and find this paper and make sure you get it on your screen. What we can do is, I think let's take our 10-minute break now. It's now 20 to 7. So let us come back at 10 to 7 and then go through this paper together. All right. See you in 10 minutes.
Kyle. Sorry, Kyle. Where would we find this paper?
Jonathan, yesterday, you know, the same place you found your notes, this paper should also have been put up.
I'm sorry, but well, actually, the notes were emailed to us, and I've never come across anything that is other than what we received yesterday, which was, unless it's the PDF one. If somebody can help me, please.
Jonathan, I think it's the one that starts with X married in community of property to Y. I think that's the question that we're going to be dealing with now.
Yeah, I don't want to interrupt here, but the link that was announced yesterday on the eLeader platform for the third lecture, underneath that, there are PDF links to Carl's handwritten notes and the question, if that helps.
Okay,
I think it was the first one. It was the first one, the only one. The others are a lot of them. This one contains only one document.
It's PDF 1, Jonathan.
Thank you. Thank you.